guys, it's Kaz here from Everyday Property Investing, and this series of articles is for the beginner investor. It's designed as a series of articles that will cover the basics of getting started in property investing. It's also appropriate for those who may wish to revisit their overall goals and investing strategy. After all, many of us who have started out as an accidental investor have gone on to develop our knowledge and strategy along the way. Now, in this part one of this series, we'll be covering getting your head right, which looks at why you want to invest, the successful mindset of a property investor, your risk profile, and setting your property investing goals, which is very important. Now, this video in particular looks specifically at why you would want to invest in property. So let's get cracking. People invest for a variety of reasons, using a variety of investment vehicles and in a variety of ways. Now, for most people, investing is about accumulating wealth. Even though when you ask people why they want to accumulate wealth, you might get a bunch of different answers. And for the most part, it generally comes back to being able to buy the things you want to buy and, more importantly, do the things that you want to do. For me, investing in property is about buying back my time. It means not having to work in a job each day that I may not want to be in just because I have to pay the bills. It means building up enough income, producing assets to be financially free, which means instead of working for a living, I can spend my time doing the things that I want to do. So we'll take a closer look at your motivations a little bit later, but firstly, let's talk about why people invest in property as a primary investment vehicle. Now, there's many different ways to build wealth through various forms of investments. There's savings accounts, there's term deposits, there's shares and managed funds. People also have business investments, and of course, there's property. So if we take a brief look at each one of those and the pros and cons, just to set the scene of how property fits into the bigger scheme of having different types of investing vehicles. So if we look at savings accounts and term deposits, now the main advantage of these items are that they're very low risk and they keep your money relatively safe and accessible. Of course, the main trade-off for having a low-risk investment is a relatively low return. However, for many people, this suits them, and the concept of low risk is the most important thing for them. Let's talk about shares and managed funds. Shares are often considered a fairly risky investment, and this is because although they can offer high returns, their volatility means that they can also drop in value quite quickly and you can lose money. Now, investing in shares yourself means that you really must take the time to educate yourself about shares and share trading or investment strategies, or you need to pay someone to deliver that service for you. Now, managed funds are a way to hand over the choice about which shares to buy and how much to put into what, when to sell, etc. to a third-party fund manager who hopefully has more idea than you. But you also pay fees to a managed fund for this type of service. Many people invest in shares through their superannuation fund, and until recent years, shares were really one of the only types of investment that a superannuation fund could make. Another way that people invest is to build a business. Many people build or invest in businesses to build their own wealth. And people build a business without really thinking of it as investing, but in reality, building a business is just another form of investment, and businesses, like other investments, produce cash flow and capital growth. Now, building a business, of course, is a big undertaking, particularly if you're going to be hands-on involved in that business. It also can be relatively high risk. I mean, we've all heard the statistics of small businesses and the number of successes there are in terms of starting businesses. So let's now look at property and what property can offer. Property has lots of advantages as an investment class. It of course offers you the potential to have cash flow as well as capital growth. It's easy to understand, and sometimes getting your head around shares and things like that can be difficult. Learning to invest in shares takes a lot of knowledge, but investing in property requires knowledge as well, but property for most people is easier to understand and to deal with. It's real. I mean, you can touch it, you can feel it, you can paint it, you can photograph it, and many investors like myself like the idea of having something tangible for their money. You can also improve the value of it. Unlike other investments where you're really just a passive observer of what goes on in the business, with property you can take the bull by the horns and manufacture your own capital growth through renovating or developing, or even thinking of creative ways to use property. This is a really exciting part of investing in property. And property is also quite forgiving. The volatility of the share market can be scary for many people, and thankfully changes in property values are generally not as dramatic or as fast as what you can see in the share market. Of course, when share prices are rising sharply, it can also be very exciting. However, when they drop, it can be heartbreaking for a lot of people. With property, growth is often far more gradual, and decreases in value often are not as great as what you'll see in the share market. For this reason, it can be considered relatively low risk. Now, of course, there are forms of investing in property that are higher risk, and there's a whole spectrum of investing in property from high to low risk. But on the whole, it's a lower risk strategy than some others. So, why do you want to invest in property? Now that we've looked at property as an investment class, let's look closer at why you want to invest in property. So, what is your motivation? Because you see, at the end of the day, owning 5 or 10 or 20 properties is not what it's all about. And when things are getting tough, like you're trying to save for a deposit, or you have to cut back on your budget, or you've got some dodgy tenants in there giving you a lot of grief, then thinking about how many properties you have or how much money you can accumulate isn't the thing that'll drive you through these tough times. To understand your real motivations, you need to go a little bit deeper than that and think about what your real motivation is. Now, the things that drive me, for example, are not having to work for an employer, being able to spend my days doing what I want to do and to enjoy the things that I enjoy, being able to spend time with my family and my children, being able to enjoy holidays and time at our beach house. And having property to me is just a means to an end. Now, I love property and I love, all the things you can do with it, but at the end of the day, investing in property is a means to an end. I want to be financially free of a job, of employment, and I want to be in control of my time and my financial future. And that's the thing that motivates me. So, what motivates you? That's the real question. That's a real thing you need to think about. Before you get started in property, have a think about what your primary motivation is. Write it down, in fact. What is important to you in your life? And what would you change in your life if you didn't have to work to pay the bills? And these are the things, write these things down, because these are the things that will really motivate you. Thanks for listening. I hope you enjoyed this video. In the next section of this series, we'll be looking at the success mindset and why this is important to you. But for now, think about what is your primary motivation, what's important to you, and what would change if you didn't have to go to work to pay the bills.